Boom. This is going to be the daily recap for Thursday, February 27th, 2025. All right, so I am done trading for the day as of about 30 minutes ago, literally. But it was a good trading day today. It was, I don't know, I'm kind of speechless. It was really a good day. And speaking it in its entirety, this week was rough. I'm not gonna lie. This week was definitely um, mentally taxing for sure. It was a lot with me executing counter trend trades because normally the way I trade, I like to stick with daily directional bias, 1 hour order flow, and making sure they're in sync with one another. That way, any trade I take, it's automatically low risk. And yeah, and like I said, this week it was just tough with overall the directional bias still being bullish and 1 hour order flow being bearish. It was tough mentally. But either way, I'm still grateful for this week. I took away a lot of lessons and then still walked away with this week being profitable. So let's go ahead and do the full trade breakdown. So net P&L, I made a total of $40,908 today. It was a short, 4 contracts. It was a counter trend swing entry trade. This trade I did rate it 4 stars, and why not 5? I'll get into that in the trade review. Profit target was 2685.50, which was the previous monthly low. Stop loss in a bearish market, of course, is going to be above the most recent swing high. But how my approach is when it comes to trade management, I set my TP and then I trail my stops to make sure I lock in profit. So worst case scenario, if price pulls back and goes against my position, if price hits my stop loss, I'm not losing money. I'm actually making money, right? Because yes, it didn't hit my initial target. I'm just saying, like, for example, it did hit my initial target in this trade, but I'm speaking generally. The reason I set my TP and trail my stops is because if price retraces against me, it'll hit my stop loss. And yeah, sure, I got stopped out, but I still banked profit. And like I said yesterday in yesterday's trade review, no trader ever went broke taking profit. So it's like, don't be afraid to pay yourself. It's actually a really good habit to have, especially when you're aiming for consistent profitability, like I still am myself. It's like, it's good to lock in those profits. You can't be mad at it. I entered here. I entered at 21,202.50 last night around 7 p.m. I'll get into that more in here. And I targeted this, so I made a total of 511 points. Daily directional bias was bullish. 1 hour order flow was bearish. Market conditions, market was trending. Mistakes, this one I was like, I kind of chased price, sure, but my main thing was I executed too late. Confidence level, it was high. Why was it high? Because I was confident in my analysis, and I've been anticipating the higher time frame draw liquidity, which is my take profit target. I've been looking at that area for price to get to since like Monday, so I was confident and I was waiting for this move literally all week. So to be able to be a part of it, again, yeah, it was high. How was my sleep? My sleep was pretty good. Slept like a baby. News on this day, we had a lot of news, and honestly, this can also be a driving force to what drove price today, because the New York Stock Exchange open did bring in lots of volume. But yeah, we had a lot of news today, so I'm not surprised that today was another expansive range day. With both the AM session and the PM session. Emotions. During the trade, throughout the trade, I went through a range of emotions, honestly. I was in drawdown for a long time. And because of that, I was nervous. But towards the end of, the trade, a few hours even before it ended, I was feeling like relief. Well, I really felt relief when the trade was officially over. Because you have to understand, the trader is like sometimes, or especially being a swing trader, when you're in these trades like overnight, sometimes days, sometimes weeks. Like in January, I was in a trade for 17 days. And then when the trade was over, it felt relief because just like sometimes being a trader can really be mentally taxing. I think that's one thing that's not talked about enough. But yeah, so when the trade was over, I was in it for almost 24 hours, but it was still mentally taxing, just constantly having to manage it and whatnot. Distractions, I didn't have any distractions at all, thankfully, because again, I entered last night before bed. So no, I was in a good spot when I entered. Pre-market routine, I'm not going to lie. This morning, I did wake up on time, everything like that, but I did not do my pre-market analysis. No excuse to why. It's just, I mean, every day is not perfect. The goal is consistency, not perfection. And today was just one of them days where, yeah, I kind of want to get to that consistency. But when I say consistency, I mean consistency over a month period, 6 month period, quarterly type. One day is it going to kill me, but I still should have done it for sure. Trade management, I'll talk about this more when I get to the trade review. But trade management was I set my TP, which is the previous monthly low I talked about. And then I trode my stops to lock in profit. Okay, so that's that. Now let me get into the actual trade review. So overview. So this trade was an insanely beautiful trade. I managed to secure 4.09% and caught a total of 511.75 points. Speechless and extremely proud of my performance today. However, I feel like I went through a lot with this trade. It was a love-hate relationship because things did start off pretty tough at first. I executed this trade last night before bed at 7:13 p.m. with the intention of it being a swing trade. I did manually execute this trade. Hold on. Gotta be detailed as possible. What kind of swing trade? Pro trend or counter trend? Counter trend. So I did manually execute this trade a tad bit. Oh, here we go again, like yesterday. A tad bit late because price had already began to move away from my POI, and because of that, I did experience some FOMO and feeling as if I had chased price. When I woke up this morning, I saw that price had retraced against me significantly, and I was sitting in drawdown for hours, for a couple of hours to be specific. I knew my stop loss was in a safe place, so I wasn't too worried about it. However, this morning, right before the New York Stock Exchange opened, I was starting to get discouraged. At the New York Stock Exchange release is when bearish, well, not at, but a little after. Yeah. After the New York Stock Exchange release is when bearish intentions start to kick in the market and price finally began to go in my favor. I was trailing my stops, locking in profit pretty much all throughout the day because I am learning to get into the habit of paying myself. At 3:29 p.m., an hour and a half before market close, is when price eventually hit my TP. Once the position was finally closed, I just felt an insane amount of gratitude and relief. I know I am not a perfect trader and there's a list of things that need improvement. However, it's the process of becoming a consistent trader that I love the most. I love learning and evolving within my craft, and it's when you put consistent work in daily and pay your time debt, the results will catch up. Loki sound like a simp. But all right, so that's the overview of this entire trade. So I did attach some screenshots. So let me break down the trade. Let's see. So this is what I entered. I entered here. So when I say in an overview, when I said, and also when I put here, I executed too late. This is what I was referring to. So this red box here, the extreme OB between this swing high and this swing low, you got the inducement above this swing high. I should have entered here. I mean, honestly, according to my trading plan, I should have set a sell limit here. And my stop loss should have been here, and my TP should have been at the previous month low. I don't know what I was doing last night to where I missed this entry completely. Or, I don't know, I think I was kind of just to my head about earlier. I'm not really sure what happened. But overall, I fumbled the bag by not setting the sell limit. Obviously, price started to move with bearish intention away from the extreme OB, and price retraced higher into this 1 hour OB here. Another entry opportunity. I missed it again, and then I entered right here. So thankfully, I entered pretty early within the candlestick. Like I said, I did enter at 16 minutes before, or sorry, 16 minutes after the hourly open. So thankfully, I still entered at a decent time. It's not like it was 7:45 or 7:50 when the candlestick was dang near almost closed. Then in a sense, I'm chasing price, but I feel like I still got in a logical place. And this, yeah, like I said, this was the previous monthly low. So it was pretty decent swing trade, But let me see. So here, so again, I entered at this arrow here, right? I entered here, and then, shortly after I entered, price started to move in my favor. And then overnight, during the London Open kill zone, price retraced against me. And between the London Open kill zone and pretty much all throughout this morning, price has been moving around my entry point, and then eventually price retraced against me super hard. And this was a 7 a.m. candlestick, 8 a.m. candlestick, and then the 9 a.m. candlestick. So once time aligned with price retraced back into another 1 hour bearish OB. Again, according to my trading plan, this is another opportunity where I could have placed a sell limit, entry here, stop loss here, and TP here. I'm not going to re-enter when I'm already in drawdown, so I didn't do that, obviously. But once the New York Stock Exchange released and time aligned with price, that's when intention kicked in because the market was then officially open. And we see the BFIs officially stepping in. When I say BFIs, it means banks, financials, and financial institutions. So the big boys with big money, they're stepping into the market and they're driving price lower. This swing low failed to take out this swing high, as you can see here. Therefore, this low was deemed as a weak low. You saw intention, and eventually my trade was back in profit again. Cool. I'm not going to ignore this low. Like, this is my TP, yes. However, you don't want to ignore places where you can see a possible reaction from. So I marked out this weak low because, yes, we did take it, but I also was expecting price to retrace. Or to see reaction temporarily to build up more sell side liquidity below here for price to later take. I'm trying to go into these as detailed as possible. Also one more thing I forgot to mention. So I entered this trade here. Yeah, here at this arrow. My original stop loss was above the swing high. I try to keep my stop loss, within market structure. And then, like I said about me locking in profit and just reducing risk as price moves in my favor, I move my stop loss from here to the newly formed swing high. And then when price broke this, I think it's in the next screenshot, I'll show it. I move my stop loss then to break even, because it's break even right now. Oh, I don't know why it does that. So yeah, next screenshot. So as you can see, we saw reaction. This old support turned into resistance. I don't really use that theory no more. When I was early on my trading journey, but now it's just something that I can't unsee, which is good though. You want to have that at the back of your brain. But however, old support turned resistance. Price respected it 1, 2, 3, 4 times. And this isn't an entry model for me, but for someone who does trade support resistance, this would have been a beautiful entry opportunity for them to catch the next leg down. Let's see. And yeah, that's pretty much it. I mean, like I said, after, like, normally I notice, like, once we're in an expanding market, like, we expand. Normally after we see an expansion, you're going to see consolidation. For who knows how long that will be, that's up to the market. We can't determine that. But I would say whenever you're seeing an expansion, always expect some type of pause in price. As you can see here, expansion, pause in price. It wasn't as this long, but it was still a pause in price. And then, we saw retracement, and then another expansion, then another pause in price, and then another expansion. So it's like the market runs in cycles. Like, once you understand that, your trading will go to the next level. And then, stop loss. I mean, TP was hit eventually. So I was in this trade for, well, I'm not going to count the candlesticks, but I'm going to go to my trade log, actually. So yeah, I opened it at 19, so 7 p.m. last night. So I was in this trade for about 20 hours, about 19 hours and some change to be exact. So those were all the screenshots of the trade. So now the entry. So the entry is where I fumbled on this trade the most. And during my overview, when I talked about this trade starting off pretty rough, that is why. Before I executed on the position, price has shifted market structure towards the downside and pulled back into a 1 hour extreme OB. And right before doing so, we did have an inducement above an internal swing high. After respecting the 1 hour OB, bearish intention stepped in and we began to see lower prices. This is when I manually executed the position. Full transparency, I did not want to miss out on this trade. And yes, it does sound like FOMO. However, I was extremely confident in my analysis. And I've been waiting for the previous month low, which is my take profit, to be reached for a few days now. Constantly journaling what I was anticipating in the charts every day, and when price finally starting to deliver, it was as if I refused to miss out because I wanted to be a part of what I've been marking up on the charts pretty much all throughout the week. Entries have been quite the struggle for me, both this month and last, and I am aware that it's an area in my trading where I do lack discipline. This weekend, I will put together a game plan to make sure I don't bring it with me into March. So, good awareness. Position size, I shorted 4 contracts, nothing too crazy. The risk was not calculated though. Again, I still have to put together a risk management plan. And as mentioned in yesterday's trade journal, I do intend on getting it done this weekend. Exit, the previous monthly low is where I placed my TP. On the daily time frame, the previous month low I had deemed as a weak low because that failed to take out the last swing high. I was confident that the previous month low was a higher time frame draw on liquidity, and it wasn't a matter of if price was going to take it out, but when. So honestly, just when it comes to this, it really all came down to patience. Especially when there's a higher time frame draw on liquidity. You know, price is going to retrace on an hourly or 15-minute, 5-minute. You're going to see price do all these different things: bearish trend, bullish trend, bearish trend, bullish trend. But no matter what price does on lower time frames, even the 1 hour, the daily, weekly, monthly, those time frames will always hold weight. So when it comes to swing trading, one thing I learned is just, I don't know, it's like sometimes you gotta just cut out the noise, you know? You can't let the retracements get to you because it doesn't matter. Like I said, if that daily time frame has a weak low in place, that weak low is getting taken. But it all comes down to asking yourself the question: do you have the mental capacity to handle retracements when price is going against you? Like I said, I was in drawdown for hours earlier before my trade hit TP. But again, it just all comes down to patience. Rating, I give this trade a 4-star. And as beautiful as it was not a 5-star trade, unfortunately. And like I said yesterday, it was just my entries, and then not having a risk management plan solidified yet. Key takeaways, entries, risk management plan. Other factors, such as just some thoughts to end the day. I just wanted to say that I have really been enjoying the transition from scalper to swing trader. Like I said, I started trading NASDAQ in July of 2022. So I'm coming up on 3 years trading NASDAQ. And if you even go back to my old YouTube channels, like I have live trades and they're all scalps, like in and out within 5 minutes. So I was a true scalper and I was really good at it. So, having to leave, or I don't want to sound like that, but like just transitioning to a new style of trading, one that will better suit my lifestyle. Now that I'm in the Navy and the military, there's things I don't have control of, like my work schedule, going out to sea, and so on and so on. So being a swing trader, it just allows for much more time freedom. So that is why I made the decision to go from scalper to swing trader. Now, sure, if I have a day off of work or I just have extra downtime, I would not mind taking a 1 minute, 2 minute entry, whatever, because it's just for fun. But when it comes to like long term, how I want to identify myself as a trader is I swing trade futures. If someone asks me, hey, what type of trader are you? I swing trade futures. So it's just, just that, having a firm understanding of where I want to be at long term. I put it is a big adjustment from a psychology standpoint. However, I refuse to give up on the learning process with this because the results you can get from swing trading are insane. It's a very fruitful skill to have. I'm definitely going to go into detail within my journaling for my weekly review and my monthly review this weekend, because this week I mainly executed on counter trend trades, and it's been a love-hate thing as well. But I am leaning more towards keeping it within my trading plan, because as a trader, it's good to have that fluidity to where I can adapt to different market conditions when needed. So what do I mean by that? So at first, like I mentioned earlier in this video, I was mainly just a strictly a pro trend trader. So when the 1 hour order flow and daily directional bias was in sync, so overall just putting the odds in my favor and flowing with the stream of the river and not against it. That's how I was trading. Counter trend trades, they're automatically going to be high risk because, again, it's counter trend and you're flowing against the stream of the river. So automatically it's going to be high risk. But again, if you're able to do both pro trend and counter trend, it could be fruitful because, again, the market is not linear. You're going to see retracements. You're going to see changes overall. But so being able to adapt to different market conditions and still come out either side, bearish or bullish market, profitable, like I said, at the end of the day, all you're doing is getting better at your craft. So like I said, again, fluidity in trading I think is key. So yeah, as of now, after this week, after this month total, I would say I would keep counter trend positions in my trading plan. I think it's just more so a case of being aware how you approach them. Like I may use a certain risk percentage, let's just say 1%. I might risk 1% on a trade in a pro trend environment, but counter trend environment, I may do 0.50% risk, things like that. So yeah, that's pretty much all. But that is the full trade review for today. It was a long week. Like I said again, it was a mentally taxing week. I'm proud with how I ended the week with my results and my performance. Lots of lessons to take away from today and this week. But again, I am proud of my performance. So this is what drives me to just keep going, keep working hard, keep showing up for myself and my craft on a daily basis. Continue to journal. I know journaling is very tedious, but it's really important because it's just like, how can you get better if you don't know what's wrong? You know what I mean? So that's pretty much it. So I won't post. I don't think I'll post a video tomorrow because it's Friday, and again, I'm done trading for the week. But I'll be back on Monday though. Monday for sure. But hope everyone has a good week and be back with the next video.